Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so go over and check that out. A little roundtable here on some earnings. Dan Ives, Senior Equity Analyst at Wedbush Securities. He joins us live here in his Bloomberg Interactive Broker Studio. I'm not sure if he's going to State College this weekend. Not sure about that. Or are they at Ohio State?
Yeah, we'll be going to Columbus Friday night.
Oh, you're going to Columbus.
Yeah.
Awesome.
Oh, nice.
Very good.
I got a bar for you. There, you go in there, order whatever you want, food and drink. If Penn State wins, they will pick up the tab. Wow. I'm going to hook you up.
All right, Geetha Ranganathan, she's definitely not going to Columbus, Ohio, because she's a professional. She covers the media sector for Bloomberg Intelligence, and we want to talk about Netflix and ESPN. Dan Ives, let's start with you. Tesla stock not liking what they're hearing from Elon Musk. What was your takeaway from the quarter for Tesla?
Look, it was a disaster conference call. I mean, because it was the street wanted to hear about pricing, have the price cuts ended, what is the outlook like going forward? Instead, this was really Musk being more of an economist. Obviously much more somber. And I think investors leave with just more questions and answers in terms of this price war that, we've talked about here a lot. How long does it continue? And obviously on Cybertruck, that's going to be a huge vehicle relative to demand, but definitely going to be an uphill battle from a production perspective.
So I got a million questions after that conference call. But my first one is on the Cybertruck. He contends that this is like a special project and that makes it extra difficult to produce. Why is that? Why isn't it just a normal truck? I mean, this could be like an F-150 competitor. It's so cool. Everybody wants it. So many people put in pre-orders. Why is it so hard to make?
Yeah, from an engineering perspective, it's very difficult. So that's one, no one argues
because
about
it's a special shape?
Because of the shape, because of the materials in there, as well as what they're trying to do from a technology perspective. That's why you talk about getting mass production. Look, that's essentially why they built out Austin in terms of Giga. But I do think Musk caution, of course, not the demand side, but the production. And to Matt's point, look, that's always been the issue with Tesla. It's not about the demand story, it's about the production. Ironically now, for the first time, demand sort of hit equilibrium when it comes to supply.
All right, so we've got Tesla down about 8-9%. On the other side, we got Netflix up 15%, monster quarter. Geetha, what did you hear on the conference call last night? What did investors hear on the conference call last night that got them all hot and lathered here for Netflix?
Yeah, absolutely. I mean, it was a blockbuster quarter on all fronts, Paul. So absolutely, the beat it was not just a beat, it was the magnitude of the beat. And the story, the narrative is really clean now. It's getting much, much clearer, as far as the margin trajectory is concerned. They promised about 22-23% margins going out in 2024. They promised, subscriber momentum kind of extending into 2024. So really kind of firing on all cylinders, if you will.
So, Geetha, it seems like, you follow the whole media space. It seems like Tesla's really pulling away from everybody else.
You mean Netflix, right?
Netflix, thank you. That Netflix is just pulling away from all the competitors, maybe including Disney.
Oh, absolutely. There's no doubt about it. We already know that Netflix is way ahead of its rivals, not only when it comes to subscriber scale, but also in terms of profitability. Remember, this is the only company that is generating profits today, Paul, on its streaming business. The rest of the space, this company is going to generate about $7-8 billion in profits this year. The rest of the space, including Disney, Warner Brothers, Paramount, all of them collectively will throw out about $8-9 billion in streaming losses. So obviously, when it comes to profitability, when it comes to operating leverage, there is no doubt that Netflix is the clear winner. They are the dominant player. But what was the biggest surprise was the fact that they're just throwing out tons of free cash flow. So this was, a stock that we used to kind of almost mock and ridicule, talking about, $3.5 billion in cash burn. This year, they're putting out $6.5 billion of free cash flow. So this is, this is a free cash flow machine. And not just that, they committed to $10 billion in buyback. So as you kind of look, at them shrinking that float, look at EPS growth. I mean, it's going to be in the 30% range for the next few years. And that is really huge in kind of this media landscape right now.
I mean, my takeaway from our Screen Time conference last week was that Netflix is the boss of everything. I mean, if I were buying stocks, I would have loaded up after I saw. Did you watch Harry Styles interviewing Ted Sarandos? I mean, Lucas Shaw interviewing Ted Sarandos
I did.
last week. I thought that guy came off like an absolute boss. They're doing everything right.
They are. Look, and I think the thing here, it's all not just about content. You think about the competition, what was coming from Disney. They've now taken a step back, and you look at that conference. That was a flex the muscles, especially when you look at free cash flow. If you look at Netflix versus Tesla, just to take those to last night, it's not necessarily about the results. It's also, if you look at the communication, the street wants to understand what the path looks like in a very uncertain, cloudy market.
Geetha, what's the headwind? What's the biggest risk for Ted and Flix?
Right now, they seem to be getting everything right. So the one concern, I think, that kind of is still kind of lingering a little bit is this whole revenue growth reacceleration. I mean, they've got all the levers in place, but ARPU has been under pressure a little bit. We saw ARPU decline a little bit in the third quarter.
ARPU is average revenue per user?
Revenue
Look at you.
Yes. Average revenue per user. So that has become like the really big metric now to kind of gauge the success in the streaming world. They did, of course, caution to that. They said it's going to be a little bit flat. But then again, we have price increases that are going into effect. We have the ad business that's going to take off. So as we kind of look to 2024, everything is in place for that metric to kind of ramp up pretty significantly as well. So right now they're getting everything right.
Hey, Dan, my big question on EVs in general, and I just purchased a new vehicle.
We're going back to Tesla now.
We're going back to Tesla.
It's kind of hard to keep track.
Well, that's why
These are two very different companies.
I know, but they're both ripping stocks. These are the ones that are most read
Tesla's
all the
getting
time.
killed today, right? Netflix
Yes.
is up 15%.
Yep.
Tesla is down 8.7.
But for me, the big issue, having just purchased a new car, BMW X3.
He loves the X3.
Love the X3, although I have like 12 miles on it. I'm just walking back and forth to the train every day. Is end demand. I really have questions about what is the real demand out there in America for EVs. Like, I'm thinking
beyond the rich, beyond like a second or third car,
like,
right?
Is there a political angle here? Like, I think half the country will never buy an EV.
Look, I mean, you're starting to get into a debate around what the demand curve looks like. But ultimately, price is so important. If you go back to traditionally Tesla, 75, 80, 85,000. Now, even with the tax credits, 35, 40,000, depending on what state you live in. But it does also, you talk about the battle from the Beltway and what's happening here, even with UAW and what's happening in Detroit with GM and Ford, it's all price driven. 3% of automobiles in the U.S. are EVs today. So we believe that goes 10, 12%. There's going to be massive winners. But it also comes down to price, especially in this macro. I
mean, as long as President Biden is going to pay me, he's going to borrow money from my kids and my grandkids to pay me to buy an EV. I'm interested, but I want the Cybertruck. That's the one I want.
Exactly. And Miller's going to have the Cybertruck while watching Netflix in full self-driving in 3-4 years.
Hey, Geetha, another big day in the world of media yesterday or in the past couple of days, Disney, for the first time ever, released financial results for ESPN. And my takeaway was two things. One, their profit margins are, there's still a lot of cash flow, almost $3 billion of EBITDA, but it declined big time, and it's nowhere near the number it used to be. What is ESPN, or what is Walt Disney Company going to do with ESPN?
Yeah, that's the big question, Paul. And I mean, one of the reasons that they kind of broke this out as a standalone unit was because they really kind of wanted to show, potentially future investors, if they're planning to sell a stake or if they're planning to spin it off, what the financials kind of look like. But obviously, the top line actually looks pretty stable at $16 billion. It's really the profit margins, as you rightly pointed out. I mean, you look at the traditional cable business, it's about 30-35% margins. You look at ESPN's margins, it's 15% this year. So that is a little bit concerning. And obviously, it is only going to go lower given that, sports rights fees are increasing astronomically. So they really need to do something with this asset. We know that they need to do it fast. The question is, do they sell it? Do they actually sell it to Apple, as has kind of been said or do they, spin it out? Again, we'll have to wait and watch. But they are definitely going to.
I kind of feel like I have to apologize to Geetha because the 25 years I had covering the media industry were the golden years. Everybody made money. What I've left to Geetha is just a hodgepodge. I don't know what's going on out there, Geetha. Can you get any investor out there to say, I want to overweight media?
No, not at all.
Ay,
I mean, everything is down in the dumps right now, other than, of course, Netflix. But we'll have to wait and watch what happens with Disney. I think they have a great collection of assets. They're trying to do everything that they can, but Bob Iger obviously has a lot of challenges ahead of him.
including naming a successor, maybe.
Yeah, it seems like that is one of his worries, but others are just as pressing. I'll be interested to see if the leagues come in and get a piece of ESPN. Is that still on the table? Dan, what do you think? Could like the NFL and some other professional sports leagues come in and take a big chunk of it?
Look, we believe this is ultimately going to lead Apple to acquiring ESPN.
Oh, you think Apple? It's all Apple.
Our
So does Laura Martin, yeah.
Our thesis has been, and Laura's talked about.
Laura says all of Disney.
No, so Laura talks about Disney,
Yep.
which obviously makes sense there too. But we believe it's really about ESPN, the live streaming asset. If you look what happened with MLS and Messi, I think they recognize in terms of Cook and Cupertino, even though M&A is obviously not their sweet spot, ESPN's a unique asset.
It'll be a better buy than Beats, right?
And that was $3.5 billion.
How much is ESPN going to cost?
I mean, we think 40 to 45 billion is probably what would be the price tag.
Nice.
But then when you look at Disney, as this conversation is talking about some of the parts, you sell Disney, and that's why there's more and more pressure on Iger and the board.
What's Disney worth? Like 150? Let me pull it up. Right now.
DIS.
Yep.
Disney is currently, in market cap terms, worth 153.7 billion.
And we
So
think
not
about
bad.
a third of that value.
So
is
if they get
ESPN.
rid of, let's say they get $50 billion for ESPN. Geetha, what is Disney then worth if they sell ESPN for $50 billion?
That is actually a really, really high multiple. So, if you kind of look where cable stocks are trading right now, they're trading at about 7.5 times EBITDA. At 7.5 times EBITDA, ESPN would be worth about anywhere from about 22 to 25 billion. So it'll be interesting. It'll be interesting if they can get that 15x multiple. That would actually be awesome. But again, you have to kind of look at Disney's, really bread and butter of the business. That is the parks business. That is going to, just a few years ago, parks used to bring in only about 35% of operating income. This year, it's bringing in about 75% of operating income at $10 billion.
Yep.
So, Disney really is parks right now, and
Yep,
parks
absolutely.
itself should be worth, I think, 200 billion.
Nice.
I just want Dan finally get back to Tesla in terms of production and the Gigafactory. There was a lot of talk on the call yesterday about whether Musk could do a lot of his production in Texas. Where are they going to build the most of their expansion, or does their expansion not look as fruitful as it did before this call?
Expansion's going to be in Austin, broader Texas, as well as in China. I mean, they're focusing more and more away from California, obviously their core
And
sweet
away from
spot.
Monterey.
Away from Monterey, yeah, and look, and fundamentally just speaks to mathematically, economically speaking, it's Texas. You talk about the Mexico plan that they're going to, ultimately start to build out, but it's really China. Capacity right now is not the issue. It's about the price cuts. Keep cutting prices. That's a bad spiral.
Yep. All right. Dan Ives, senior analyst at Wedbush Securities, covering all that fun stuff in tech, and Geetha Ranganathan. She is the media analyst at Bloomberg Intelligence, based down in Princeton. And Dan, heading off to Columbus, Ohio, to see undefeated
The
Penn
great
State
state of Ohio.
take on undefeated
The
Ohio State University.
Ohio State.
Huge.